Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Hope everybody had an awesome 4th weekend. I did go out on Twitter and you should, by the way, @Grinnell Frank is my Twitter handle. Please look that up. Give us a follow. I did bring up what I felt one of the most patriotic things to do would be to pass the CHIPS Act in terms of not cementing, but reasserting our leadership in semiconductors. Haven't really been there in a while. In terms of manufacturing prowess, Taiwan Semi is far and away the best manufacturer on leading edge. Be great to put earnest steps towards catching them potentially, maybe even passing them, which would be incredible. But without the CHIPS Act, I don't know if that happens necessarily. So hopefully the broken system in DC can see their way towards passing that for the benefit of all and generations to come. Anyway, futures down about 1.2% in equity land. VIX up 3, crude's up tiny, nat gas down again like 5%, 7%, 544. Occidental, Berkshire steps up again, buys more shares, 9.9 million, I think. Is that right? They love it in the mid-50s. They now own a 17.4% stake in the company. I'd like to just talk about, for us, where we're at position-wise going into the back half of the year. We currently have, I think, 25% cash. Our largest holding is long volatility. We also do own the TLT, kind of that 20-year plus treasury, that old Lehman instrument. I don't know how much longer we're going to hold on to that as rates may start to reassert themselves higher again. We've had a pretty good run on that instrument. And then we own some large pharma. We own Lilly, Merck, Pfizer, Vertex. Those have been winners this year. No reason, I think, to change what's going on there. Morgan Stanley came out this morning positive on Lilly and AbbVie. I think they said the back half of the next decade, but their point was they are a couple franchises that have some strong growth on the come. In terms of other positions, the K-Web, we do own a position that we've talked a lot about this. Not that I trust China and everything going on there with what they're doing and enforcement acts that they can bring on companies, but at the end of the day, their technology companies trade at a vast discount to ours, even still, and they've got a more accommodative regime around them when it comes to monetary policy, as opposed to our restrictive one we've got in place here. Goldman Sachs is another one. We bought that really recently. It's the only big bank that trades at a discount as a tangible book, under 1 times tangible book. I don't know. We're going to add to that probably later this month. I don't know if there's a big rush to do that either. And then also, I don't know if you own, so one thing we've learned past recessions, people don't tend to give up on their vices. Like the vice stocks can be pretty decent. We own Molson Coors. We've owned it for most of the year. TAP is a ticker. That's been a great performer. 14 times forward earnings, not too commanding on valuation. And again, people tend to, I looked at Constellation, they're 21 times forward, so that's a little more expensive. I'm going to keep the Coors. I do want to be more involved in cybersecurity. For those of you that came out and listened to our mid-year update and outlook call, I did talk about those mission-critical secular growers, cybersecurity being really the poster child for that statement. We own a tiny tiny piece of cybersecurity right now. I do want to get more involved there, but again, it's one of those things where I'm not sure I see the rush. But names on the forefront for us in that space: Zscaler, CrowdStrike, maybe Palo Alto. But taking a continued look there. So coming up this month, CPI on 7/13. Watch out for that. Fed meeting later this month. Big question probably if they go 50 or 75. And then Q2 earnings reports coming out. So one of my favorite expressions, as I've said and you've heard me say, this is not the time to think about the stock market in terms of stocks, the whole stock market up or down or whatever. It's the time to think about a market of stocks. So I really think this is getting back to a stock picker's environment. And some stocks within that notion, some stocks are going to bottom before others. Some stocks probably have bottomed already. It's kind of your job, our job, to sift through, figure out what those stories are, figure out those compelling valuations and stories, and find those and identify those opportunities. So that's big on the list for us this month. So as these Q2 earnings reports come out, perfect opportunity for companies to just lower the bar, kitchen sink things. No one's expecting positive guidance really for anybody outside of maybe, like I talked about, the pharmaceuticals, things like that are actually doing quite well. But in general, great opportunity for companies to lower the bar. Analyst numbers have to come down on forward earnings expectations and top line expectations. So the more that process happens, the closer we do get to a bottom in the overall market and for individual stocks. And that is it. Have an awesome day, and we will talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The Ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, Grinnell.capital.com.